Welcome to the Happy Cows Eat Smart podcast, brought to you by Novus AgriScience, where your dairy's business success is our passion. In our monthly podcast, we cover updates and insights within Federal Milk Order 33. Our team of expert ruminant nutritionists delivers research-backed, custom feed solutions tailored to your herd, because we know every farm is unique and no two solutions should ever be the same. We go beyond nutrition. Through robust tracking of herd metrics and financial benchmarking, we help you optimize costs, boost performance, and build profitability so you can focus on what matters: happy cows and a thriving business. So whether you're tuning in from your office or your truck, join us each month for insights, stories, and strategies that promote herd health, farm performance, and dairy success. Let's make your business thrive, one episode at a time. And now, Dr. Lawrence Jones will share his insights for Federal Milk Marketing Order 33.
Thank you, Ben. And I'm recording this program on January 19th, which is a federal holiday, and the markets are actually closed today. But I always like to get started with your milk check. Overall, it looks like income decreased 23 cents when we account for different components here. Fat and protein did increase, but their prices did go down. So I've got you at 19.28, and that's very close to what the USDA has reported, 19.29. That's just a rounding error. So if we start with the statistical uniform price, we're actually higher than we were through most of 2020 and 2021, but lower than we were during these particular run-ups. And the really big question right now is what's going to happen? Are we going to kind of hold out here, come down, or try another run-up? And my suspicion is a run-up is probably a little bit unlikely. Now, one of the things that controls your statistical uniform price is the percent of each class. And so this month, class 1 and class 3 came down. Of course, class 1 has got the highest price, and class 3 and class 4 came up because I think they came back into the pool. But again, not major changes. So the class 1 price was $18.21. That was up $1.46. That was off of the low we had last month. Now, and then we add that $3.80 for order 33, which gets us to $22.01. And that is the price that was on that previous page. With the federal milk marketing changes, we moved to the higher of class 3 and 4 for the skim price instead of the average plus 74 cents. And then in December, we increased the skim components of class 3 to 3.3% protein, 6% other solids. So I think that's part of what drove that December price up just a little bit. Specifically, if we look at fat, came up 6 ticks, and the price dropped about 13 cents. So here's the price, $1.58. That's actually the low for the year, off of our high last year at $2.95. And this does look like it's going to drop in the $1.40s and then head up a little bit, and that's completely controlled by butter. So we'll see what happens to the butter price here. And fat percentage has just been going crazy, 4.5. I mean, who would have thought a federal order of mainly Holsteins at 4.5. That's crazy. Up 8 ticks from a year ago. So this thing was going up and then just took off for the moon here. And the whole country has done that because your 4.5 compares to 4.65 for Texas, 4.6 for the Northwest. And overall, the country came up about 6 ticks in December. Protein came up about 3 ticks, but the price dropped 56 cents. So we're down to $2.46 off of the low that we had in July of $1.87, but off of the high we had last month at $3.01. Looks like we're going to hang in this $2.20 here, through the first half of 2026, again, depending upon cheese price and the butterfat price. Same with fat. Protein is just going ballistic. We're up to 3.47. That's up 9 ticks from a year ago. So again, we've just raised all the components. Here's your 347, Texas 362. Who would have ever believed that? And Northwest at 354. But your 347 does beat us in the Northeast at 3.4. Other solids doesn't change in terms of percentages, but the price did come up about 4 cents here to 43 cents. So here's our basically 5 cents rounded error come up here. That's up significantly from the 29 cents we had back here in June. But this is going to trickle off. It looks like whey prices are probably going to trickle down a little bit. And again, other solids are completely controlled by whey. You get paid on fat, protein, and other solids, so class 3 is not actually in your check, but if you look at all those together, that is the class 3 price, and that came down $1.32 to $15.86, and that's going to be our low for the year, but it's going to drop, even down further here in January to $14.75, and unfortunately my numbers are actually saying closer to $14.50. So the December contract just really fell out of bed from 6 months ago, down $2.76. Sometime here in August and September, I kept saying I just really feel bearish about this market, and boy, did it ever just collapse. And then finally, PPD, that's going to be controlled largely by the Class 1 and Class 4 prices. And that came up, quite a bit to $1.81, and that's all a result of the increase in Class 1. And so our Class 4 prices hit the low for the year at $13.64, down a quarter, and it's going to drop here in January and stay below 14 here for a couple months. Just want to talk a moment about PPD, because again, it was $1.15, and so at first blush I would have said it should have been negative because Class 4 was so low, but they put so much value on Class 1 with the new premiums that Class 1 was $22. So that's $6 above Class 3. Class 2 was $1.45 under. Class 4 was $2.22 under. But if you weight those by the percentages, it should say the PPD is around $1.50. Again, there's a lot of things that aren't in here, so $1.50 is simply telling me that it should be positive as opposed to negative. And it's all got to do with this Class 1 price being much higher than it was previously. So I think last month I said, with this kind of configuration, we'd have negative PPDs. But again, with Class 1 having those new premiums and it being so much higher, that's not the case. So right now, Class 3 is at $16.54 for the next year, and Class 4 is at $15.11, with a significant advantage to Class 3. So what's driving this market? So right now, we've got a holiday here on the 19th. We're going to get the milk production and cold storage reports the end of this next week. We've had the October exports. We should have December, but they're not scheduled yet. So we're slowly getting back into the USDA routine of getting reports. But I think the big news is just these cow numbers. We're up to 9.57. We blew away this 9.5 that we had previously, so we just come up significantly. But they look like they're trending down. But unfortunately, I've put together my estimates for December. And looking at some of the federal milk marketing data, I think we're going to be up 1.1% month over month, which is up 4.6% year over year. But to get that with the milk production that we're going to have, I need to raise cow numbers by about 20,000 cows. So I'm unfortunately thinking that we might have a bit bump up in these cow numbers. And the only other thing that supports this is the fact that in December we usually slaughter fewer animals because we have two major holidays in those weeks. So right now we are slaughtering in the 24-25% range, which says that we're going to increase cow numbers. We need to be much higher up here above 30 for the cow numbers to come down. So another calculation that I just did, which I found interesting, a friend of mine bought some springing heifers for $3,300, and a couple of people said, man, that's entirely too much money. He got those out of, I think, Iowa and Pennsylvania. But they're all bred to Black Angus, and so if he can get $1,500 for that Black Angus calf, that means he's going to get those heifers into the barn at $1,800, which now looks fairly attractive. Now, yes, he's going to have some DOAs in that calving, but again, Angus on springing heifers should be a fairly good calving situation. So I think one of the things that we got to kind of keep an eye on is these heifers that are being bred to Angus and then being sold on the market, and they look to be expensive, but when you actually do the math on it, it doesn't look too bad. Let's turn to exports for just a minute. We had a global dairy trade 2 weeks ago. We're going to have another one tomorrow. This last one was actually up. We'd been on a very big downward trend, and then we popped up. Now the one tomorrow is projected to be down a little bit, but we should be exporting a tremendous amount of butter at $2.31 on the world market, $1.36 on the spot market, And cheese should also be exported, at a 212 on the global market, $1.29. But here are the October exports, and again, we should be getting the November ones soon, but they're still behind with the government shutdown. We did export 9.6% of the production, so that's very good. Historical is about 6.9, but again, that's not a huge amount of percentage. Now, in terms of cheddar itself, 6.7%, so that was actually up at $1.97. But this is probably white cheddar, and only yellow cheddar is given on the spot market here. Butter was also fairly strong on price, but again, we only export about 4% of the production, and we probably import just that amount also. So again, not a big impact on butter price. In this week's weekly podcast, I asked the question, where is the bottom on this market? Because one of the numbers I track is the cumulative change, which is nothing more than the average of the 12 months of contracts compared to yesterday. And we've been coming down, hitting new lows. We've pulled $4 off of this contract since the middle of 2024. So very much a bear market down. And the spot market is kind of doing the same thing. This is spot cheese. We hit a new low we thought we'd hold. We broke through it with another new low, broke through it with another new low. And so the question, are we going to hang in here at this $1.30, or are we going to see a bounce back up? Now, one of the things that is very interesting is the fact that cheddar production is not going up like we have been historically. So that's a long-term trend. So the cheddar production is basically the same cheddar production we had back in 2021. I think that's a very good thing, because if we were making a tremendous amount of cheddar, which could come to the spot market, then we could be seeing some really low prices. And in fact, what's happening is overall cheese production is up, but it's mainly the Italian type cheeses, which is always the largest percentage of cheese. American style cheeses are dropping, and that includes cheddar. And cheddar itself is actually down, whereas the other cheeses are holding steady and on an upward trending long-term trend. So the question I keep asking is, why aren't these guys dumping a ton of cheese into the cold storage? Because I thought once we got to January, the forward curve would look like, maybe we should be putting cheese in the cold storage. And at least at this point, it doesn't appear that we are. So historically, we only add about 10 million pounds to cold storage in December. So I'm not expecting a tremendous amount of change in the cold storage report on Friday. And one of the problems is December starts what we call the spring flush. The month-over-month number for USDA is up about 1%, which is how I came up with those numbers on the previous slide there. January is up usually about 2% month-over-month, and then February remains about that 2%, and we start slowing down a little bit in March, and then we get into the summer slump, after April. So I think they're just nervous that this contracts aren't going to hold like this, because if we just keep producing this amount of milk and this amount of cheese, this thing just continually comes down, and I don't think they're willing to take the risk of putting in at $1.40 and having to pull it out at $1.30. In terms of crops here, this WASDE report last Monday was a bit of a bombshell. Everybody expected the stocks for corn to go down, and USDA raised them 12% relative to the trade estimate, and they raised soybean up about 16% above the trade estimate. Overall production, again, everybody thought that production was down, but in fact they raised it by almost 3%. And a little bit for beans, but the big one was the actual yields. Last November report was at 186. Everybody again thought it would come down to about 184, but it actually increased to 186. And you've seen numerous reports of people saying this is just not right. The government should have actually lowered that. Again, we'll have to see what the data looks like. But corn came down for the week, $3.80. It's 158. Right here in the middle of this channel that I've kind of got built for the last 12 months or so. Soybean meal came down the most at almost $10, and it's at the bottom of this channel that we had, but it's still over $300 a ton on the board. And I've been tracking feeder cattle and live cattle because it does make up such a large percentage of your check. Feeder cattle are starting to gain a little bit. They added a penny up to 352, and live cattle are hanging in there at 229. And then just to finish up with weather, I'm sure you guys are feeling all of this cold that we're getting here. A little bit of moisture coming up to the midsection, but the big story is this polar vortex. And again, if you haven't seen this graph before, it is the winds around the polar vortex. And anytime we have a significant drop, that's when the polar vortex splits and kind of moves into either the western hemisphere or the eastern hemisphere. So last year, this thing went up, down, up, down, up, down, up, down, then crashed here in March when we had this huge polar vortex inversion. So this year we went up, we had this polar inversion, we're expected to go up and come down again. So in another 45 days, we're probably going to have another polar inversion. And there are several people that are suggesting that it's kind of following last year's pattern, and that once we get out here to March, we could have just another tremendous cold spell and a very late winter. And so if we look at the polar vortex, this should be a little circle up here. And again, this is the top of the United States here, but this thing has become extremely elongated. And then we've got this high pressure that's trying to split it in half, which will then take a significant amount of this into the eastern seaboard here. So that's what everybody's looking at and kind of trying to assess exactly how long this winter is going to last and how cold it's going to be. But looks like it's got a ways to go yet. All right, back to you, Ben.
Thank you, Larry. Novus AgriScience hopes you found this information insightful and look forward to next month's installment.